Today I'm asking Todd Novosel with NFM Lending some questions that many buyers have about the basics of mortgages. So Todd, the first question that we have is, how would you say is the first step when it comes to a buyer getting pre-approved for a mortgage?
Excellent question. First steps will be to have a quick introductory 10 to 15 minute phone call where I can understand your circumstances, what you're trying to do, and then start a loan application.
And now, how do you determine how much a buyer can actually borrow? What factors weigh in the most on those?
Yeah, so the biggest things that factor into this are going to be the overall debts that appear on their credit report. Things like credit cards, minimum payments, auto loans, student loans, that's a big one.
Okay.
And then if they currently own a house, their current mortgage, and if they're going to be buying without selling or selling that house in the process.
Okay. Now, if they do have a home to sell, what factors determine can they buy a house without selling that home versus, just being able to, or would they have to sell it first? Like, how do you determine who qualifies for that option?
Perfect. So biggest thing that's going to go into that is the overall debt ratio. So we're going to take all of those debts, whether they have a house or they don't, and we're going to take all of that, plus then the projected house payment on what they're trying to buy, take that payment, add everything together, and divide by their overall gross monthly income.
Okay.
A lot of people think that it's the net income, but we can actually use their gross income.
Oh, I didn't know that. Good
Yeah.
to know. All right. Well, we do have a couple other questions. And can you clarify what's the difference between a pre-qualification and a pre-approval?
That's a good one. Pre-qualification is me just having a conversation with a client, potentially looking at their credit, but not reviewing everything on them more formally, such as their bank statements, pay stubs, W-2s, tax returns if they're self-employed, and doing a more extensive, thorough research on that client. So the initial check would be considered what's called a pre-qualification. The more thorough, extensive check is a pre-approval, and that is much more beneficial for that consumer to actually get out there and start looking at homes with a pre-approval where the lender has done their due diligence.
Yeah, I know as a listing agent, I definitely, if buyers are writing on one of my listings, I want to see that pre-approval letter. I want to know that all the boxes are checked and they're qualified to buy the home that they're writing an offer on, just so it doesn't waste my seller's time. So that's extremely important.
Excellent. Yeah.
And I do have one more question. And how much should buyers realistically plan to put down as a down payment on a home?
It can vary. The absolute minimum that somebody needs to put down is 3%.
Okay.
They do have to be a first-time home buyer to qualify for that option. There are other programs out there with 3.5% to 5% down if they've already owned a home. And then there are a few specialty type loans like a VA loan, which would help a veteran buy a house with zero down. And there's some rural housing options out there with zero down or potentially down payment assistance.
Okay. Now, can a first-time homebuyer, can they receive gift money for their down payment if they don't have the funds themselves?
Yes, absolutely. In fact, anybody that is buying a home can get gift funds from family. So it's a great option to consider. So good job on that.
Okay. Well, stay tuned for more mortgage tips, and please feel free to reach out anytime if you have any questions.